Okay, this is the statements of cash flows for Abbott and Medtronic by Group F, which involves Joshua Baker, David Torres, AJ Bergen, and myself, Tice Robinson. So I'm going to go over the operating activities of Abbott Laboratories in their cash flow statement. So as you can see, Abbott generates a positive cash flow from their operations, as seen at the bottom, but it has significantly declined from 9,581 to in 2022 to 7,261 in 2023 when looking at some of the challenges in generating their cash. While their cash flow from their operations does remain higher than the net income in all 3 years, we can see that the drop in net income from 7,071 in 2021 to 5,723 in 2023 is indicative of some other issues. The decrease is primarily influenced by cash being tied up in trade receivables, which increased by $356 in 2023. The higher inventories of 232, which could suggest difficulties in collection and excess stock. Despite this, we can see that there aren't any super pressing concerns regarding their liabilities. The increase in these accounts payable has been inconsistent with some notable negative shifts, as you can see in 2023. Moving forward, we believe that Abbott may want to focus on managing working capital more effectively in order to enhance their cash flow and stability.
Hello there, this is Josh Baker with Group F, presenting the statement of cash flow analysis for Abbott Industries. Starting off with the inflow section, we can see that the vast majority, almost exclusively, of its inflows is coming from operations, and that's been pretty consistent year over year with the percentage of contributions from operations being fairly consistent. Although the overall totals of operations has been declining year over year since 2021. A couple inflow highlights is while decreasing annually again, the vast majority of contributions comes from operations and remains stable. And then all other inflow contributions have remained very stable year over year as well. The inflow section also shows low issuance of long-term debt, and then with that issuance of long-term debt being very proportional to its stock repurchases. In the summary analysis of its outflows, we can see that the main contributions are PP&E, debt repayment, purchase of common shares, and dividends. Again, those major contributors are PP&E, stock repurchase, debt repayment, and dividends. There has been a consistent investment year over year in plant, property, and equipment, which shows that the company is committed to investment to grow its operations. Additionally, one note was an increase in acquisitions in 2023, especially in comparison in previous years, which was none in 2022 and minimally in 2021. Another caveat was a significant increase in long-term debt repayment in 2023, and if we erase that long-term debt repayment, that would have significantly reduced the outflows by almost $2.4 billion. And then from the outflow highlights, we can see consistent annual dividend payments. So, looking at the overall change in cash for Abbott, we see that total inflows have been declining since 2021, while total outflows are increasing. And even if we had taken away the $2.4 billion in long term debt repayment in 2023, that still would have resulted in a negative cash flow for 2023. And we see that that is primarily due to decreasing cash flows from operations, which is an overall concern for Abbott for the long run. One consideration for potentially short term increase in cash would be seeking out different avenues for cash flows, such as investments or financing. However, those could be short term, and the overall concern is overall decreasing cash flows from operations. Thank you.
Hello, my name is David Torres, and today we will be going over the Section 5A in Medtronic for Medtronic Laboratories for this assignment. Here in front of us, we have the Medtronic Lab cash flow statement in the operating activity section. What we go over, we'll go first. We want to go over if the Medtronic's laboratories is succeeding on their cash flows or generating that cash flow not in their operations, and then we can comfortably say yes, they are. From throughout all throughout the 3 years, they're positive. If and they are and the net cash operating net cash provided by operating activities is over the net income. So that's a good sign for Medtronic Laboratories. However, we definitely want to look at some room for improvement and some things that maybe they could have improved on. So we can see here from 2022 to 2023, the net cash provided by operating activities decreased by 1,300 from those years. And the biggest contributors to that drop was, of course, the net income dropping from 5,000 to 3,700, and the not recording of the impairment of the inventory write-downs. So they could have not have any of those assets, or um, they uh, they they missed on writing those. So that could be something to look into. Now, as far as the biggest contributors to the cash flow is, of course, the depreciation and amortization. They definitely invested in a lot, and we can see that it's depreciating as it goes. However, it's a very steady and no changes throughout the 3 years. The biggest fluctuations in cash flows from the operating time, which is we can see an interesting pattern here, and we'll start with accounts receivable and inventories, and then we'll go into accounts payable. So from 2022 to 2023, we can see that it increased the accounts receivables and inventories, reflecting that there could have been more credit sales, as well as going from 2023 to 2024, uh, uh, both accounts receivable and inventories decreased very significantly, likely due to the increased sales activity and, of course, customers paying back from their accounts receivables. Now going into accounts payables, over here in this section, and accrued liabilities, we can see that they took out some loans here and went from them when high from 2022 to 2023. However, they were able to pay those back quite a bit of it in 2024. So these trends suggest that in 2025, accounts payable may see a slight increase and maybe a decrease, uh, but but these changes are expected to be modest. Um, and another thing too is um, because there's no worry for for Medtronic because the cash flow is is a lot more over the accounts payable. Um, Sorry, the net cash provided by operating activities is way over the accounts payable. So there's something that investors shouldn't be worried about. Thank you so much for watching, and I appreciate your time. Bye bye.
Hello, this is AJ Bergen, and I'll be going over the summary analysis for Medtronic's consolidated statement of cash flows. So first, let's start off with the inflow analysis. Here we see Medtronic's primary source of cash is from operations, as with most firms, consistently representing about 44% of total inflows in 2024 and 2023, which is a little bit lower than 42% in 2022. The steadiness in cash from operations shows strong ongoing business performance. A significant second source is sales and maturities of investments, which made up 48% of inflows in 2024, which is a little higher than the prior years of 54% in 2023 and 55% in 22. The consistency here the consistency here reflects Medtronic's regular strategy of liquidating investments to maintain cash flow flexibility. Additionally, we observe an increase in short-term debt in 2024 of 1 billion, representing 7% of inflows. This is new compared to zero in previous years, possibly indicating recent short-term financing needs. Lastly, Medtronic raised cash through issuing ordinary shares consistently at 2% of inflows, and minor contributions came from investing activities and financing in select years. Overall, inflows totaled about 15.6 billion in 2024, which is a strong recovery from the 13.7 billion in 2023. Next is the outflows. The largest category here is purchases of investments. In 2024, these accounted for 50% of outflows, which is up 35% from 2023 and at 57% in 2022. This reflects Medtronic's commitment to investment strategies even as market conditions fluctuate. Another major outflow is dividends to shareholders. In 2024, this amounted to 3.7 billion or 23% of total outflows. Acquisitions net of cash significantly impacted outflows in 2023 at 9%, driven by strategic acquisitions, though this is lower in 2024 and in 2022. Additionally, repurchase of ordinary shares was a little noteworthy, especially in 2024 at 14% of outflows, an indicator of Medtronic's confidence in its own stock value. Another major expense included additions to PPE at 10% in 2024, signaling ongoing investments in infrastructure and payments on long-term debt, primarily last year at 28%. Lastly is let's go over the change in cash. In 2024, Medtronic's total inflows were 15.6 billion, closely aligned with its outflows of 15.6 billion, leading to a net cash change of negative 29 million. This balance indicates strong cash management, covering operations and investments without significant cash reserves change. Last year, while inflows were still strong at 13.7 billion, outflows surged to 21.5 billion, resulting in a large cash decrease of 7.8 billion. And then in 2022, it was also relatively stable with inflows of 17.6 billion and outflows of 17.3 billion, yielding a positive net change for once of 351 million. Overall, Medtronic Inc. is prioritizing investments, shareholder returns, and managing debt, showing commitment to long-term growth while maintaining cash stability. Thank you.